Jeff Newton here with National VA Loans. To contact us, of course, you can dial us at 855-956-4040, or you can check us out online right here at nationalvaloans.com. Guys, today I want to kind of talk to you a little bit about the loan estimate, or the LE, that you'll hear a lot about in the mortgage industry, or when you're talking to a mortgage person, and you've probably even heard it on different videos and different news, and you've seen it places. But what is it? What is an LE, or what is a loan estimate? And that's a very good question, because it can be confusing, especially if you're not in the industry. So today I want to kind of just show you what a loan estimate looks like, and how you can, as a person that's not in the mortgage industry, as a veteran that's purchasing a home or refinancing a home, exactly what you need to be looking at when you're getting your mortgage paperwork from your mortgage banker. So we're just going to kind of run down through this. It's the loan estimate, or the LE, is exactly that. It's a loan estimate. It's an estimate of all the costs associated with doing your loan. Now, of course, there's origination costs, there's title costs, there's appraisal costs, there's appraisal, title, credit. There's just so many different things that are involved, and that are sometimes out of the control of your mortgage banker. But we're going to kind of go through that and see what we can look at here. So what I want to start with is, and I'm just basing this on our mortgage bank, our Community First National Bank, which is where we do our loans at. I'm a licensed loan officer with Community First, and so I'm just going to roll down and show you exactly how all of our loans look when they're going out the door. Now, of course, there are exceptions to those rules, but typically all of our loans will have the same origination charges that we have on everything. So not only do you see what these fees are, but let's explain what they are. So we're going to start here in line 801 of our origination charge, and under that you can see it's $11.85. Well, how does that broken down, and where does that go? Well, there's processing fees, there are underwriting fees, and then of course wire transfer fees that are associated with this. The processing fee, and let me explain what a processing fee is for. A processing fee is just that. It's for processing your file, and it's for collecting. We have loan processors that actually collect the conditions and the stipulations, as far as your pay stubs, your W-2s, verification of employment, verification of rent, verification of mortgages, verification of credit. There's a number of different things, and I promise, if I had my processor on here, she would say, "Oh, I do way more than that," and she's right. She or he, but in my case, it's she, and it's someone I've worked with for over 12 years now. She's the backbone of our system. She knows exactly how to move the file and get it done to where it can close in a timely fashion, because that's our number one goal, is to make sure to close loans on time for our veterans. The underwriting fee is a little bit different. However, it is similar to the same. We have underwriters that are on staff, so we can underwrite your loans faster. Some companies don't have underwriting fees, and that's because they're brokers, and they will broker your loan out to a third-party origination company, and they will pay for it through there, in a way. And we'll kind of get into that here in a minute of how they would pay for that stuff. But underwriters are obviously very vital to the mortgage process, and are a necessary evil, as some might say. But they are very vital, and we have some really great underwriters and really enjoy working with them. But that's where those fees come from, the $570 and the $600, especially and like I said, I'm talking about how we work here at Community First National Bank, and in association with National VA Loans. I'm going to scroll down just a little bit, and we'll come back over here to this lender paid origination compensation, and of course origination and discount points. We'll get into that a little bit, but I want to scroll down just a little more. And you'll see here in line 804, you have your appraisal fee. Appraisal fees range between $400 and I've seen them upwards of $750, just depending on the type of loan. Typically on a VA, and depending on the area, of course, we're looking between $450 and $500. Some areas in some states are a little bit higher. I know that we just did one in Arizona. The VA charge for the appraisal was $600. So that is definitely one that it does vary, but it shouldn't vary very, sorry about that, but it shouldn't vary a lot. The credit report fee, I can tell you that we have a total credit reporting fee of $52, and that includes the initial tri-merge credit report for you and or for both borrowers on the loan, or even if it's just one borrower for one borrower. That pulls all three credit bureaus. It gives us access to all the trade lines that you have on your credit report. And it also allows us that there may be some things we need to fix on your credit. We can get that taken care of as well. So you should expect to see that fee on there on most loans. If that fee increases above that, it's typically because there was something else that had to be done on credit. However, you are allowed and should ask for your credit invoice at the end of the loan process if you have questions, especially if you see that number, no matter who you're doing it with. If you see that number that seems a little bit high, I've seen credit reporting bills of $800-900 for one borrower, but there was a lot of work done. But if you see a number that's high on there, I would suggest getting a little more information on it and maybe seeing if you can take a look at your credit invoice. A final inspection fee is for the appraiser as well. Now, not every fee or not every loan is required to have a final inspection. So let's just assume that this one does not. We'll just remove that out of there. Final inspections are only required if when the appraisal comes to us, if there were subject to things, if there were some things that had to be completed before or corrected or fixed, or deficiencies that had to be completed or fixed prior to closing the loan. If that's the case, then the appraiser will have to go back out after we know that they've been fixed, and they'll of course charge an additional fee. Usually it's a trip fee and a little bit for their time. Next is your taxes, insurance, and things like that. Your prepaid escrows is what we call them. And you'll see this right here. You've got homeowners insurance of estimate of $110 a month, and then property taxes are estimated at $240 a month. Here in a second, I'll show you where we escrow those in. Of course, on a VA, this is the first time use of a VA loan for this individual, and it is 2.15% funding fee based on loan amount. So in this case, it'd be $5,160. The thing I need everyone to remember about this is this is put in on top of your mortgage. So if you have a $240,000 loan or purchase price, you will see a VA funding fee is $5,160, and you'll notice right here $245,160. So the purchase price is $240. The VA funding fee is financed on top of that, and you're able to finance that in instead of coming out of pocket with it. A really, really great thing the VA did for all our veterans. Saves you thousands and thousands of dollars being able to do it this way. Now we're going to scroll down here. I want you to see here where you see the taxes and insurance. Of course, now you have 2 months in homeowners insurance and 2 months in property taxes, and that's just to build your escrows and to start that escrow account. So with that being said, we're going to scroll down, and we don't have any fees here, of course, but this is where your title fees will come into play. And title companies are different, and for every area, they're different for every loan, they're different for every loan amount. They're different. They're different. They're just different about everywhere. But we'll use a good estimate of about a settlement and closing fees of roughly $350. Closing protection letters about $25, and that's a CPL. And then your title insurance and things like that, roughly, they kind of range. It's just a fair range. Now, if you notice that your title fees seem a little higher than what you would think, then I would definitely go ahead and ask to either A, change title companies, or B, see if you can get a reduction on those costs and make it a little bit easier for you. Those are all fees that are going to be included in the loan. Now, it's all different, of course. On a VA purchase, if the seller is paying your costs, a lot of these fees can be paid by the seller, and that's no problem. Of course, on a VA refinance, depending on type of loan and things like that, you can roll these costs into the loan, and you won't have to worry about actually coming out of pocket with any of these fees. Of course, if you have any questions on this, you can call us at 855-956-4040. We'd be more than happy to explain any of the costs and any of the fees that are associated with the VA loan. In fact, we'd be even happy to tell you what fees you may or may not have to pay. And if you have more questions, this is a good one right here, is the discount points and adjustments. These are good questions to ask about fees, because a lot of times you'll see a discount point on there and you want to know exactly what it's for. This is usually and typically used to buy your interest rate down or to lower your interest rate. These fees are typically tax deductible and included in the loan, but we can give you a little bit more information on that as well. Of course, it's 855-956-4040, or you can always check us out on the web at www.nationalvaloans.com or on Facebook at facebook.com/National VA Loans. Guys, we appreciate it. Thank you so much. Thank you for your service. And again, if you have questions, 855-956-4040. Thanks a lot. Bye-bye.